You may believe in your new business or product idea, but it's hard to know how many potential customers will be interested. Doing a total addressable market calculation can help you determine the growth potential of your new company. Today, we'll check out how to determine total addressable market. Before starting the video, please subscribe to the channel and click on the notification icon so that you get notified when we upload the next video. Number 7. Know your TAM before you take action. Starting a business or projecting next year's revenue growth is always thrilling. But if you want to follow a realistic path towards success, you need to first understand what's actually possible. So let your total addressable market be your North Star and guide you through a journey that's rooted in reality, not hype. Number 6. How to calculate total addressable market. The fundamental math equation for calculating TAM is a very simple multiplication problem. Average revenue per user, ARPU, times the total number of potential customers in the target market. ARPU is pretty straightforward and can be adjusted as part of the business planning process, but the second part of the equation is trickier. TAM equal ARPU, total potential customers in market. External data sources are often used to calculate the total potential customers, whether that means relying on industry analysts or government statistics. But those sources rarely divide the market up exactly how a particular company views it. So, while these statistics can be a starting point, some additional effort must be made to get a number that more accurately represents the number of likely customers. Number 5. Top-down analysis. Top-down is represented by an inverted pyramid, where the narrowest part of the pyramid represents the company's end-user profile. It is presented in the form of, according to secondary market research, this industry is a X billion-dollar market and leads into how your company manages a percentage of that market. The top-down approach to calculating TAM uses industry research to estimate the size of your addressable market. Popularly, secondary market research from companies such as Forrester, Gartner, or other consulting groups are often used to determine how many end users meet your market criteria and how big that industry is. However, research that has already been conducted does not often meet the exact specification for your addressable market, and estimations are often made to carve out or add on segment estimations. With top-down analysis, you start with the largest possible estimate and then narrow it down using information about your business. For instance, let's say you're starting an online women's clothing boutique. You might start by using research from Forrester, Gartner, or other consulting groups to determine how big the e-commerce market is. Of course, not every e-commerce customer will want to purchase women's clothing, so you can use third-party data to further narrow it down from there. Top-down analysis is usually represented by an upside-down pyramid that represents the larger population at the top and the smaller segment at the bottom. It's not a bad place to start, but it does have its downsides. First, you have to rely on information from third-party analysts, which may not be entirely accurate or up-to-date, and the research that's already been done may not represent the exact specifications of your addressable market. If you decide to use top-down analysis, it's best to hire your own market research consulting firm. That company can conduct research that is specific to your company and industry. Number 4. Bottom-up analysis. The bottom-up approach, conversely, starts with an ideal target market on a small scale and then blows it out to a total. This could be based on looking at a small sample size of theoretical customers and then extrapolating it. However, it is far more useful when it is based on an initial set of customers, say from a limited pilot test, and then projecting that out over an entire industry, country, or market. Because the data is generated in-house and based on real-world experience versus educated guesses, it is generally given more credence than top-down estimates. Bottom-up analysis is more accurate because it relies on your own company data. Here is the calculation you'll use. Total number of customers times annual contract value equals TAM, T-A-M. You'll start by multiplying your average sales price by the number of total current customers. This number is your annual contract value. From there, you'll multiply your annual contract value by the total customers and get your TAM. The bottom-up analysis is the preferred way to determine your TAM because it uses actual data on pricing and the use of your product. Instead of just sharing general third-party statistics, you have information about the types of customers your business can expect to serve. 3. Value theory analysis. One of the limitations of top-down and bottom-up analysis is that both methods look at existing information and assume a new product offering will fit into them. But what if your business is trying to expand into a new product or service and you're trying to figure out how to cross-sell current customers? In this situation, value theory analysis can be helpful. Value theory analysis looks to how much value customers will receive from your product or service and what they'll be willing to pay for that value. There's a lot of guesswork that goes into value theory analysis, but it can be a helpful tool. To get started, you'll estimate the value your product brings to a user and how that will be captured through pricing. It's an excellent way to look at what customers find valuable and what they'll be willing to pay for. The value theory approach is the wild card of total addressable market calculation and is best applied when a truly novel product is creating a new category and there is, therefore, no real market data to base things on. It begins by asking what a typical buyer would be willing to pay for a product or service based on the additional value it brings. This is then multiplied by the total number of people that would also perceive that value and adopt it in place of existing alternatives. Here's how we might estimate Uber's TAM using value. We'd consider the use case, transportation, in which users choose between alternatives including staying put, walking, public transportation, biking, taking a taxi, or driving themselves. Notice that Uber has the potential to draw from all of these buckets, and indeed it seems to. We might look at transportation data and ask the theoretical question, how much would a user pay to be driven instead of X? And solve for a number. Next, we need an argument for how much of that value unlock we can capture with price. If a startup sells a soon-to-be commoditized product that adds a ton of economic value, it may struggle to capture that value and see the benefits accrue to customers. This approach often comes to the forefront when companies are considering expanding their core product and cross-selling into existing customers as part of a long-term strategy. Many pitches include some version of this, implicitly or otherwise, because big parts of the product are yet to be built. What is helpful is that this approach helps management teams show that they are thoughtful about what customers find valuable and are willing to pay for. Number 2, using total addressable market calculations. Figuring out your total addressable market is worthwhile in various ways beyond simply estimating the size of your opportunity. The process can also allow you to do a deep dive on the makeup of your market, so you can better segment and target its constituent parts. You can use this analysis as guidance as you market your product and to gain a reliable sense of where you put the most effort and where you can expect the most robust return. A specific and well-thought-out TAM calculation is also the best way to convince potential investors of your startup that you understand the playing field and are prepared to market your products effectively. Number 1, why is TAM important? The total addressable market, TAM, is the first ingredient in almost every business case and the essential information to consider when pondering any business opportunity. Without a sense of how many people or companies can potentially purchase a product, it can be difficult to validate any subsequent assumptions about revenue, growth, or usage. When an organization considers building a new product, entering a new vertical market, or even adding a new feature, it is critical to understand the revenue impact of that strategic move. Calculating TAM may reveal that an opportunity isn't as attractive as initially thought, or it could show an even larger market than originally considered. With this information in hand, companies can make more informed decisions about where to invest their time and money for maximum ROI, even discarding their plans when the TAM is too small. I've seen hundreds of startup pitch decks in my time at Matrix and have found total addressable market TAM slides to be among the most frequently mis-executed. Jared Sleeper, Matrix Partners. TAM can also be of value when calculating the impact of a new market entrant or pricing change. Understanding how market share may change based on these factors is only truly valuable when the total market opportunity is understood, since it extends the consequences of these actions to revenue projections. When investors or board members are evaluating a company or product's prospects, TAM is inevitably one of the most important data points they will ask for, as it provides a relative value for the opportunity size compared to other investment opportunities they may be considering. The TAM calculation process also forces a company or product to truly define itself and see where it falls within the overall competitive landscape. While TAM may be calculated for a snapshot in time, it will change. Markets shrink and grow all the time based on demographic changes, business cycles, and technology adoption. So, when used as part of a forecast, those macroeconomic elements should also be considered, and calculations should be revisited regularly. Do let us know in the comments how you've determined your TAM. Thanks for watching.